Hello, and welcome to a special presentation on the 27th of January of 2012 for South Africa. My name is Bryan Barnes, instructor and senior consultant with VectorVest, and I'll be bringing you this evening's presentation. This presentation is entitled Making Money with the MTI, Understanding Market Cycles to Better Manage Our Risk. At VectorVest, our mission statement is to provide you with the best stock market guidance available anywhere at any price, and we have an outstanding set of tools that allows us to do just that. To begin today's journey, we're going to go into the program and take a more in-depth look at market timing from VectorVest's point of view. Let's get into the program. The front page of VectorVest is designed to read like the front page of your local newspaper, where all of the headlines are put right here at your fingertips. The main focus each and every day is always on market timing. It's the single most important fact that we can look at on a daily basis to make sure that we're making better educated decisions about our investments. When you open up the homepage of VectorVest, you notice the main emphasis of market timing because we put it right here at your fingertips. A daily routine is that we open the program up and we look up top to look at the market timing gauge. Currently we can see that the market timing gauge is dead center in the yellow, the colored guard is neutral, and that VectorVest advocates caution when buying stocks at this time. Our market timing gauge is comprised of the top row of lights from the VectorVest color guard. When we look at this box, we're looking at a 6-day snapshot on the movement of the market. Today's lights, we had 3 yellow lights straight across the board. That's what gives us the needle dead center into the yellow. The supporting components for market timing, you have the color guard's price, the color guard's relative timing, and the color guard's buy to sell ratio. We can begin to take a better understanding of these by looking over to the left-hand side at VectorVest at a glance. Currently, as of Friday, 2012, January the 27th, we're currently tracking 350 stocks. Of that database, 146 stocks have a buy recommendation and 39 stocks have a sell recommendation. The remaining 165 have hold recommendations. To get a better understanding of the overall broad market support and movement of the market, we take an indexed average of the entire database of stocks that we track, which will give us the VectorVest composites price for South Africa. Currently, we're seeing that we're closing at 3,140 rands and 50 cents. That gives us a good indication of the overall broad market support and movement. When the VectorVest composites price for South Africa is rising, we can say with confidence that the price of the market is rising. Vice versa, when that price is falling, then again, with confidence, we can say that the price of the market is falling. Below that, we have the VectorVest composites relative timing for South Africa, and relative timing is a technical indicator that runs on a scale from 0 to 2. This indicator is looking at the short-term price movement of the VectorVest composite. Tonight, we see that the closing is at 1.17. Because this indicator has closed above 1, then the short-term trend of our market is said to be up. If this indicator had closed below 1, we'd say that the short-term trend of the market is down. The next indicator that we look at is our buy-to-sell ratio. The buy-to-sell ratio is an indicator that it is measuring the overall strength or weakness in the market. We're simply dividing the number of buy-recommended stocks by the number of sell recommended stocks. Currently with a level of 3.74, then that's given us about a 3.7 buy recommended stock to every 1 sell recommended stock inside the database. When this indicator is above 1, it simply shows that we have more buys than we do sells inside the database, and the higher that number gets, the healthier that the database is becoming. More strength is showing up. Below 1, we would have more sells than we do buys. So below 1, the buy-to-sell ratio is showing us signs of weakness. The indicator that we really want to concentrate on this evening is the MTI. The MTI stands for the Market Timing Indicator. It's the master indicator of the market. We're combining the price of the VectorVest composite for South Africa, its trend, the RT, and the buy to sell ratio into one single comprehensive indicator. The MTI also runs on the scale from 0 to 2. This looks at what we say is the longer term trend or the underlying trend of the market. When the MTI is above 1, then the underlying trend of our market is said to be up. Below 1, the underlying trend of the market is said to be down. We're going to begin to take a more in-depth look at the historical performance of the MTI to do a better job of understanding market cycles that will help us in managing our risk. Before you leave the home page, the one thing you want to do is you want to treat this color guard right here, this 6-day snapshot, just like you do a traffic light. When there's a predominance of green, we know that we have the ability to be buying with little worries. On yellow, we're going to use caution. On red, we're going to stop buying stocks, begin to tighten stops, and visit the positions that we have. So all of this information in hand, what we're going to do is we're going to come out to this box right here. This is the market timing indicator that's providing us with a 6-month snapshot on what the master indicator of the market is doing. We're going to reach up and we're going to click on the header to open up the market timing graph. And when it comes up, I'm simply going to reach up and maximize it so we have the best visibility. When the graph comes up, by default, we're looking at a 1-year graph where our data points are recorded daily. The black line is a visual representation on the recorded daily movement on the price of the VectorVest composite. We track that against this magenta colored line. This is a 65-day moving average. Again, it's 65 daily information, so it's a 65-day moving average. The blue line down here on the bottom, this is our MTI. The red line is the one value line. So we're always looking at the tracking above it and below it to find out, again, is the market rising or is the market falling? The one thing that we understand that is when the market is rising, 80% of the stocks will rise with it. When the market falls, 80% of the stocks will fall with it again. So it feeds into our mantra to always buy safe, undervalued stocks that are rising in price in a rising market. Well, what we've learned about the MTI is that it has historical characteristics to it. So we're going to look at as much data as we currently have right now for the MTI. So we're going to come over here to our period in the top left-hand corner, click the drop down. We're going to go to all daily. We're going to reshuffle this by clicking Get Graph. That will refresh our information. Now again, this is the entire history that we have for the South African database. And we can see that this was back, if I take our date line, this is all the way back to July the 1st of 2008. We all know what happened to the world economy and the market sliding off the tables in 2008. This is going to be our recovery point, if we look correctly, in 2009, right there on March 11th. So what we can plainly see with these market cycles is that if the MTI is falling, the price of the market is falling. If the price of the market's rising, the MTI is rising. And then we know this throughout its historical movement. Again, with the 65-day moving average, it does a pretty good job that when price is above this, we're said to be bullish in the market. When it's below the 65-day moving average, we're said to be bearish in the market. What we're going to do is I'm going to move our date line back off to the hard right-hand edge of our graph. Now what we're going to do is we're going to come up top, we're going to click on Drawing, we're going to go to Lines, and we're going to click Add. What I want to do is coming down here with the MTI running on the scale from 0 to 2 is I'm going to take and draw a line right here at about the 1.60 line all the way across the top of our graph. Move it down just a little bit. This should give us a good reflection at about 1.60. The 1.60 is going to represent that as the market begins to rise and we get up into that zone, then the market has a tendency to start seeing resistance or becoming top heavy, what we refer to as being overbought at that time. Well, that's the upper resistance point. Believe it or not, the the MTI also has a lower resistance point. So we're going to go back to drawings, lines, add, and I'm going to draw one down here which would reflect about 0.60 on the bottom. Now, as we look at this, the 0.60 mark would represent when the market is becoming oversold. And when we get down in that area, we want to free capital up because we want to get into the market early entries, that when this market pops, we want to do a better job of an early entry into the market. Now, with recent data right here, with only about 3.5 years, what I would do right now, until we get further information and further historical performance on this, I might have a tendency to slide this up where I'm really coming in contact with the majority of the bottoms of this particular market cycle. So now we can see we're probably somewhere in the neighborhood of about 0.72, 0.75, somewhere in that neighborhood, and that's okay. The whole concept is, again, this doesn't have to be exact science. What we know is that anytime the MTI is down here and it's very low, obviously the market had been trending downward, and we should have been taking profits or hedging positions, doing everything that we can to stay out of harm's way, the severe downturns in the market. When this begins to rise and turn back up, then this is where we want to know that under these extremely oversold conditions, this is the best opportunity to get back into the market for some explosive profits. Okay, so the concept is, let's learn to recognize that when this thing bottoms out, let's be patient. Let's get out of harm's way. When it begins to turn around and head back up, let's get in and enjoy a nice, long, healthy rally. But at the same point in time, as this MTI gets up into the upper resistance area, let's do a better job of protecting profits. And if the lights start changing from green to yellow, let's back off. Let's slow down. Let's tighten some stops. Let's set still and let this market continue. The thing that you see about this historically, and you'll notice that as this rally continues, your MTI has a tendency to want to linger around the tops more so than it does when it corrects and goes down to the bottom. Sometimes the recoveries are quicker. So you don't always know that just because you're getting into that area that it's time to sell. It just shows that it's time to use a little bit of caution. And again, to support this fact, knowing why this is so good, let's do something. What we're going to do is we're going to come over here and take the MTI off, and I want to put on the buy to sell ratio. The thing that we notice that when the buy to sell, or when the market bottoms out, the buy to sell ratio will explode. We also look at oversold conditions of where the buy to sell ratio gets below a level of 0.20. Okay, I'm going to remove those drawings because again, those lines are in relationship to the MTI, so they're not reflecting the right numbers for the MTI. What we will do is we'll take another line, click add, and we'll draw it somewhere down in here and around the 0.20 line. So combining, looking at the buy to sell ratio, getting in extended oversold areas at 0.20 and below, and historically we know that their support floor for the MTI is at 0.60 and an upper resistance at 1.60. Okay, you'll notice that when your rallies take off, you get an initial explosion on your buy to sell ratio. And most of the time what will happen, not all the time, but most of the time what will happen is that as these rallies continue, your buy to sell ratio explosions may not be as strong. It's a simple reflection that as the rally continues, we have fewer and fewer stocks that are participating in this rally. I don't want to go into a whole lot of detail, but I want to make sure, just like every market that we service, the concepts for what VectorVest teaches, they're very simple, but they're basic. Understanding them, controlling these, being consistent, using discipline, you can always do a better job of getting in earlier in the market and also taking profits or finding protection earlier as the market tops out. We're going to take our graph right now. We're going to close it. We're going to come back to the home page, and what we want to do to finish up is to see how this information right now is affecting where we currently stand in the marketplace. And to do that, we simply come up to our main navigational toolbar. We click on Views, and we click the VectorVest views from our drop-down menu. And from here, what I always want to do each and every night is I always want to specifically look at the market timing aspect from VectorVest. And we see that right here on the expanded color guard. This provides us with a 15-day snapshot on what the market is doing. We always start at the trend column. The trend column says that we have two positions. It's an up-up situation. The primary wave is up. That's our fastest, most aggressive timing pattern that's inside the database. And the reason why we're up here is price right now at 3,140 rands and 50 cents is higher than it was 5 trading days ago. Let's look at it. 1, 2, 3, 4, and 5. 5 trading days ago, the price of the VectorVest composite for South Africa was at 3,124 rand and 20 cents. So we are higher than that. The price of the market on a 5-day cycle moved upward, right? That's the primary wave. The underlying trend, the second position, again, is talking about the MTI because the MTI is above 1, so the underlying trend of our market is up as well. You've got a good rally that's going on in the marketplace. Continue to participate with that rally. If this MTI continues to rise, go with it. Just use more caution as you replace your stocks. This MTI starts to turn over a little bit, set still for just a little bit. The light reflection is going to be the same thing. Let's ease off. Maybe we tighten some stops. But I guarantee you, the quicker we pick up on this, the one thing we ensure ourselves is that we never have to watch the portfolio ever unravel. Ever. That's the great thing about the insurance policy, understanding market timing from VectorVest's point of view. Okay, so the market's moving in our favor. Let's participate with it, but let's keep an eye on these levels as they get higher. Let's just slow down, use caution, use a little bit of protection. The last thing I want to do is I know that if we close this and we come back to this main navigational toolbar, there's a lot of good tools up top. If we go to Views and the Market Calls Viewer, we can see that the overall call of the market, we've been in a confirmed up call, a market up call, ever since October the 10th. What do we mean by a confirmed up call? Okay, let's close this. And if I open the market timing graph back up, still have the price of the VectorVest composite, what we're going to do is we're going to reach up top, click on markers. We're going to go to market timing dates. Now you have a red line, which would indicate a market down call. Green lines are going to be your confirmed market up calls. The one thing that we can never avoid is when a confirmed down call comes about, to ignore it because of the whipsaws that we see. When that happens, we lose sight on our portfolio. We get too relaxed in the marketplace, and all of a sudden that portfolio starts to unravel. By using market timing and backing it up with money management, we're going to do a better job of that. Now the question is, you say, Brian, okay, we understand that. We've got some good indications here, but what makes up the confirmed call for the market? Outstanding. It's a great question. We're going to reach up and close that. If you come up top to your main toolbar, we're going to go to Research. We're going to come down to Special Reports. There's a lot of great information that's here. What we're going to do is we're going to reach over and click on the color guard. There is a lot of great information right here at your fingertips on the color guard. And I'm simply going to scroll down. And it says, the rules for a confirmed signal. A confirmed up, C/up, signal is given when both of the following occur. Number one, the price of the VectorVest composite for South Africa has increased 5 trading day period over 5 trading day period for 2 consecutive 5-day trading periods. In other words, 2 consecutive 5-day trading periods in a row, 2 weeks of upward movement. The price of the VectorVest composite for South Africa has also increased from the prior day. And then number 2, the confirming fact. The market timing indicator, the master indicator of the market, has got to be greater than 1. When that happens, the confirmed up call is given. Just the opposite is going to occur to give us a confirmed down call. A confirmed down call, the C/down signal is given when both of the following occur. Number 1, the price of the VectorVest composite for South Africa has decreased 5 trading day period over 5 trading day period for 2 consecutive 5-day trading periods, right? 2 weeks downward movement. The price of the VectorVest composite on that day has also decreased from the prior day. And then the confirming fact is that the MTI, the market timing indicator, is less than 1. There's a lot of great information inside these special reports that I highly encourage you to come back in here and look at. How we look at the color guard, 3 green lights, 2 green lights, and so on. So remember, if you come back to your main toolbar up top, click on Research, come down to Special Reports, there's a lot of great information on the guidance for the market. Each and every day, look at your home page, read it. Also go in and look at your views and simply understand by looking at the timing section what is going on in the marketplace. If you get into the habit of doing this daily routine, I can almost guarantee you that you're going to do a lot better job of capturing your profits because you're going to get in quicker and you're also going to learn to be defensive at the right time. Simply reach up and close that, and that's going to bring us to the end of this presentation. As always, we wish you a great deal of success with your future trading. If there's ever anything that we can do, feel free to give us a call at product support at 0800-981-981. I appreciate you all joining with me today. Anything we can do, again, give us a call. Have a great weekend.